David R. Guttery is an investment advisory representative of Ameritas Investment Corporation and president of Keystone Financial Group in Trussville, Alabama. Please stay tuned through the end of the video for additional important disclosure information.
Today I am joined by David Guttery, president of Keystone Financial Group in Trussville, for a discussion about the market and economic outlook for 2018. Hi David, how are you today? Welcome.
Very well. Thank you for having me.
David, the markets and the economy fared well in 2017 in spite of political tension in Washington and international concerns. I'm sure that many of our viewers would be interested in hearing about what they can expect in 2018.
There are many positive forces that are impacting markets and the economy right now, and we anticipate those forces will continue to gather momentum throughout the year. However, this also stands to be another year of political unrest, and the markets will be paying close attention to those developments. Politically, many House and Senate seats will be up for re-election in 2018, and thus the balance of legislative power will be in focus. We will begin to see the impact of the Tax Cuts and Jobs Act of 2017, which could spur significant economic growth and result in greater employment metrics and higher income.
With regard to the new changes in tax law, explain to our viewers why this could be a force behind the market and the economy in 2018.
Sure. It will be impactful on two fronts. From the corporate perspective, companies have been sitting on growing amounts of cash for years. CapEx spending has not been at historically normal levels, and this was due in part to the presence of lending restrictions, provisions of Obamacare, and other factors of regulation. Those have already been largely rolled back. According to Haver Analytics, nominal levels of corporate cash have never been higher. Companies want to spend, and now burdens of taxation will be lower, and the opportunity to repatriate dollars will be lucrative. We expect this to translate into higher levels of spending on capital equipment, expansion of plants, and acquisition of human resources. On the personal side, as jobs are increasingly plentiful and incomes rise, both as a function of higher wages and lower taxes, we expect consumer confidence to increase as well. Confident consumers spend money at higher rates, and such accounts for about 70% of economic growth. It's the beginning of a positive economic feedback loop, and one that we haven't seen in over a decade.
You've noted before that areas of the market respond differently to economic changes and pressures. At a high level, what areas of the market do you think might prosper if these economic growth trends gain momentum?
In my opinion, those would be energy, banking, diversified financials, process automation technology, defense, and growth companies in general. I would expect the dollar to continue weakening against the global basket of currencies throughout 2018, and for the 10-year Treasury yield to move higher. These factors would be a tailwind to the energy and banking sectors. Greater consumer confidence and spending would be of benefit to diversified financials, and especially those in the consumer financial space. $700 billion was appropriated to defense spending in November of 2017, and this remains a commitment of the Trump administration. So the defense sector will likely benefit in the face of growing international unrest. I would expect the automation technology sector to benefit from a return of corporate CapEx spending. Lastly, with an economy earmarked by higher velocity of money, higher inflation, interest rates, and weakening dollars, growth companies in general should fare better than their value counterparts.
It sounds like this would be a good time for people to assess where they are positioned in their portfolios relative to their goals to benefit from these developments.
Absolutely. Sometimes you arrive at a point of inflection where that which worked in the past doesn't work so well when economic conditions change. We are at such a point now. Having an understanding of the economy and the financial physics of the market is critical as we transition into an accelerating growth economy.
Thank you, David. For additional information, David may be reached through the means listed upon the following screen. For the Trussville Tribune, I'm Tana Friday.
David R. Guttery independently offers securities and investment advisory services through Ameritas Investment Corporation, member FINRA and SIPC. AIC and Keystone Financial Group are not affiliated. Additional products and services may be available through David R. Guttery or Keystone Financial Group that are not offered through AIC. Some of the products and concepts discussed have their own cost and are subject to risk, including the possible loss of principal. These costs and risks will be thoroughly discussed with you prior to any recommendation or solicitation. Past performance is no guarantee of future results.